Welcome back. XRP whale accumulation just hit a 10-month high, and it has almost nothing to do with yesterday's Iran ceasefire bounce. Nothing to do with the $3.3 million ETF inflow that showed up in the headlines. Everything to do with a product Ripple launched on April 1st, one that placed XRP directly onto the dashboards of Fortune 500 CFOs. $13 trillion in corporate payments ran through that platform last year. And on the day XRP became a native asset inside it, the price moved 0%. So let's break it all down. Here is what Ripple launched on April 1st. Digital asset accounts and unified treasury inside Ripple Treasury. A treasury management system, or TMS, is the software CFOs run every day for payroll, vendor payments, foreign exchange, cash forecasting. For 40 years, these systems handled only fiat. Holding crypto required separate custody, separate logins, manual reconciliation, auditor sign-off. Most CFOs refused on paperwork cost alone. Ripple erased that wall. A Ripple Treasury user now creates a digital asset account inside the same platform. XRP and Ripple USD sit next to cash. Real-time valuations in the CFO's reporting currency. Automated transaction sync, onboarding completes in minutes, no external custody. No third-party wallet. Mark Johnson, VP of Global Product at Ripple Treasury, stated the design principle directly. Digital assets should behave exactly like cash inside the platform. This is not a startup experiment. Ripple acquired G-Treasury, a 40-year-old enterprise treasury software company, in 2025. Last year, Ripple Treasury facilitated $13 trillion in payments. That is more than the annual GDP of China, moving through one platform in 1 year. Multiple Fortune 500 customers were already in beta before the April 1st public launch. Corporate demand is documented. Ripple's 2026 survey of more than 1,000 global finance leaders found 72% saying they must offer a digital asset solution to stay competitive. Most said they had no starting point. Ripple just handed them one. Now, I spent 3 hours in the on-chain data before this video. Here's what I found. Pay attention to these next 3 data points. They explain the setup. 1. Whale accumulation. Wallets holding 10 million XRP or more are stacking at the fastest pace in 10 months. Long-term holder supply is rising. These wallets do not chase ceasefire rallies. They accumulate ahead of events they expect. 2. Relative ETF strength. On April 7th, Bitcoin ETFs lost $159 million in a single session. Ethereum ETFs lost $64.67 million. XRP ETFs took in $3.3 million, led by Bitwise and Franklin. One product bought while every other crypto product bled. Institutions call that relative strength. 3. Investment-grade credit. Kroll Bond Rating Agency assigned Ripple Prime a BBB rating. Ripple Prime is Ripple's prime brokerage arm. BBB means Wall Street counterparties can now trade with it under standard credit frameworks. No exceptions required. That is the plumbing that precedes institutional capital. Stablecoins add the 4th layer. Global stablecoin volume hit $33 trillion last year, up 72% from 2024. Ripple's stablecoin RLUSD has grown to $1.3 billion in market cap in its first year. RLUSD settles on the XRP ledger. Every corporate RLUSD transaction generates XRP-denominated network fees. The fees are small. The volume is what matters. Okay, bullish case made. Now let me stress test it. Here's the data point that keeps me from going full bull right now. XRP ETF assets under management peaked at $1.24 billion in January. Today they sit at $947 million, down nearly $300 million in 10 weeks. March alone recorded $31 million in net outflows. Yesterday's $3.3 million inflow matters, but one green day against 6 weeks of red is a pause, not a reversal. And here's the part that should make every holder pause for a second. Open interest in XRP futures has collapsed 73%, from a peak of $10.8 billion to roughly $2.4 billion today. Both sides walked away, longs and shorts. On March 27th, $14.16 billion in quarterly options expired on Deribit. Since that expiration, XRP has been trapped between $1.28 and $1.33. Every bounce stalls under $1.40. Every dip finds the 28 floor. All right, that's the data. Now let me tell you what's fighting against it. If you've been wondering why your portfolio doesn't reflect any of the news I just covered, the next 3 minutes will explain everything, every chart, every metric I just showed you. There's one force overriding all of it. That force is the Federal Reserve. The Fed cannot cut. Inflation is still running above target and rising because oil crossed $100 after the Strait of Hormuz conflict in late February. It cannot raise, the economy is slowing, so it holds. Every hold keeps capital in Treasury bonds and out-of-risk assets. XRP is one of the riskier assets on the list. The Iran war escalated the pressure, oil above 100. Fed inflation forecast revised upward. Institutional capital rotated out of crypto across the board. Every XRP catalyst in 2026, the March 17th SEC and CFTC commodity classification, the ETF launches, the Ripple partnerships, the recently announced MasterCard collaboration got buried under macro conditions hostile to every crypto, regardless of its own fundamentals. Now add the holder problem. Roughly 60% of circulating XRP supply is held at a loss. The average cost basis is $1.44. Every bounce toward that level triggers exit selling from underwater holders. 6 consecutive red months. XRP down 64% from its $3.65 all-time high. Below the 50-day EMA at $1.38. Below the 200-day EMA at $1.88, a confirmed death cross. RSI at 38. Fear and greed. Index at 13. Extreme fear. Yesterday's 5% bounce to $1.37 was a geopolitical reflex, not a trend reversal. When the next bad headline hits, that same reflex runs in reverse. Here is the contrast. Ripple just launched the first corporate TMS with native XRP. Ripple Prime earned investment-grade credit. Ripple Treasury moved $13 trillion last year. 72% of 1,000 surveyed CFOs say they need a digital asset solution. And XRP trades at $1.34, 64% below its all-time high. All of this is real, and yet XRP is trading at $1.34. Fundamentals set the destination. Macro sets the timing. Now the supply layer, long-term holders, wallets holding more than a year without moving, are adding. 30-day realized price sits at $1.20. The gap between long-term holder cost basis and current price is compressing while accumulation rises. Historically, that compression precedes reversals. Ripple Treasury already onboarded multiple corporate customers in beta before April 1st. XRP custody flows tied to real corporate accounts are already recording on the ledger. The ClearConnect connectivity layer lets any existing Ripple Treasury fiat customer turn on XRP in minutes, not weeks. Minutes. Okay, here's the part where I might lose some of you, but I'd rather lose viewers than mislead them. None of this is priced in. It may not be priced in for months. Corporate Treasury adoption is slow by design. CFOs pilot. They need board approval, auditor approval, tax council approval. A product launched April 1st will not show meaningful XRP balance growth on corporate books until Q3 at earliest, possibly Q4, possibly 2027. If you came here expecting a pump next week, that is not what this announcement delivers. This is a slow-burning fuse attached to a very large device. Now, the resistance map. Think of these levels as ceilings. Each one has billions pressing down. Ceiling 1, $1.40. The range cap for 3 weeks. Breaking it requires a macro shift or enough volume to absorb the sellers unloading every bounce. Bitwise and Franklin bought into it yesterday. Not enough on their own. Ceiling 2, $1.44, the average cost basis for the 60% of holders underwater. Every touch triggers exit selling. Breaks only on sustained pressure, not spikes. Ceiling 3, $1.88. The 200-day EMA falling since March 4th. The death cross line that tells institutional algorithms to stay short. Breaking it reverses the bearish trend across every major time frame simultaneously. 3 ceilings, each thicker than the last. All right, you have the map. Now let me show you the 4 checkpoints. All right, let's make this actionable. Information without a plan is just noise. Signal 1, Clarity Act markup in the Senate Banking Committee. The bill permanently defines XRP as a digital commodity under federal law. Alex Carcady at Motley Fool. If it does not clear committee by April 30th, it is dead for 2026. The midterm political window closes. Sam Dowdu at 24/7. Wall Street frames April as a 3-event month. Clarity, FOMC, Iran. Watch for any Senate Banking Committee date announcement, witness list, or markup scheduling. Signal 2, FOMC meeting April 28th and 29th. Powell's press conference language matters more than the decision itself. Any dovish shift flips risk assets immediately. Watch the dot plot. Signal 3, daily XRP ETF flows. If yesterday's 3.3 million inflow becomes 3, 4, 5 consecutive green days, institutional buying is returning. If it stays isolated, the bearish thesis holds. Signal 4, Ripple Treasury corporate customer names. Any Fortune 500 company publicly disclosing XRP holdings through Ripple Treasury is an unpriced catalyst. The market does not believe corporate adoption will happen, so the first confirmed name resets that assumption. Bullish scenario, conditional, not hope. If Clarity moves before April 30th, the Fed signals dovish on the 29th and ETF inflows turn positive 3 days in a row. Sam Dowdu's $1.60 target opens. Bearish scenario, honest. If Clarity stalls, the Fed stays hawkish, and yesterday's ETF inflow was noise, $1.28 support breaks, and the next real support sits below $1. Down more than 20% from here. You don't need to guess. You just need to watch these signals. So let me bring this all together. On April 1st, Ripple embedded XRP into the financial plumbing of every major corporate treasury desk in America. $13 trillion in annual volume, 40 years of institutional trust, one platform. Whales are accumulating at a 10-month high. Ripple Prime just earned investment-grade credit. XRP ETFs beat the entire crypto ETF market yesterday. The price has not responded because the Fed, the Iran conflict, and 60% of holders underwater are running interference. Those are timing headwinds, not structural ones. I'll be covering every development, the Clarity Act markup, the FOMC decision, the ETF flows, the corporate adoption names every single day on this channel. Tomorrow, what happened to XRP Ledger transaction volumes in the 48 hours after the Ripple Treasury launch? I have the on-chain data pulled. There's a signal in there nobody has talked about yet. I'll have the numbers, I'll have the breakdown, don't miss it. The setup is in place, now we wait for the trigger. This content is for informational and educational purposes only. It is not financial advice. Always do your own research before making any investment decisions. Until next time, stay sharp, stay informed.